Sure, you can get out, but can you get back in? Selling everything right now feels great. We know that President Trump is now hanging with the bears and he forsworn the bulls. As he himself said, you can't really watch the stock market. The stock market's the problems of the rich, and they don't matter as long as they can take a hit. And that's the zeitgeist from the Walmart White House, where Trump's giving us everyday lower prices for stocks. The Fed on hold, too much inflation. We used to talk about how Powell and Trump would be puts on the market, meaning they represent a floor. You weren't going to go through the floor. Nobody's talking about a put anymore. So, of course, you want to sell. It relieves the pain immediately. You're no longer burdened. You can go about your life again without worrying about your portfolio. Buy, buy, buy! Today's a good read on what's happening. People are capitulating because they want to get rid of the pain and they don't want to lose the gain. But you heard what I pressed. See, there's just one problem. How do you get back in? Maybe you should be doing buying right now. I know that feels like a silly question on a day like today where the average is being killed. We need to worry about capital preservation, not capital appreciation. But I'm somewhat of a market historian, charting all along the way since 1979. I've spent years questioning why the market hasn't created more millionaires. The average has been stupendous since I got in the business. I'm talking 42,000 points in the Dow. But the individual stocks, they've been far more extraordinary. To get those gains, though, you have to stay the course. As Ken Langone told us last week, the big gains occur only about 8 days a year. And that's the problem. The whole day was obvious that only consumer products and healthcare stocks made you money. There haven't been many days like this, so people sell their losers out of fear. So out goes Apple or Microsoft and Netflix and Meta. Why not? You don't want to give up the gain. And there is no Magnificent Seven anymore. Scrap it right now, okay? I am banning the term from the show as of this evening. But think of it like this. Days like today are what kept you out of the big gains of the same stocks. Most people never get back. They don't buy. They forget, or they think they can't tempt fate, or the market's too brutal. So they stay away and miss these huge gains that would have made them millionaires. It's why you should be thinking of buying the great companies here, not selling them. To not get good merchandise as it starts being really cheap is a failure of imagination. To not have held them all the way could be a failure of recognition. Recognition that these things do get better and that managements are not static. They do things to make their companies better. So if you sell here instead of buy, you're getting out when maybe you should start thinking about getting in. Sure, sometimes these sell-offs are really right. Back on October 6th, 2008, I went on the Today Show and said that if you needed any money in the next 5 years, you should take it out of the market. S&P was at just under 1,100. It was an excellent call. Next thing you know, it was the 666 a few months. That's where it bottomed. Then the late Mark Haynes, a friend of mine, host of Squawk on the Street at the time, made a call exactly 16 years ago to buy the market. We call it the Haynes bottom around here because it was perfect. The anniversary is the bottom today. I spoke to Mark that day. He said that I'd been bearish and that I'd been correct, but it was time to go positive. I argued with him. My call had been so right, I can't walk away from the terrific call. He said it wasn't terrific until you close it out and that I was wrong to stay negative. I didn't like to argue with Mark. I folded and went positive. 666. I got a lot of people out before the market cratered, but I never heard a soul bought the stocks back on my mimicking the Haynes bottom. S&P's now at 5,600. They missed a huge number of points. They avoided the big loss and also avoided the colossal gain. It was about as perfect a call as you could possibly make, but when I look back, sometimes I wish I had said nothing because so few people got back in when the market was down 40%. Even then, it was right to stay the course. So in honor of the Haynes bottom, remember, even when it's terrible out there, and it is terrible, stocks do bottom, and you have to do a little buying. The lack of clairvoyance of Haynes, well, I plead guilty to that. But we know that you have to do some buying because, well, it's been right since 1979. So I have to ask you something. Are you willing to bet that this time it's wrong? I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.